నమస్కారం. డాక్టర్ బిఆర్ అంబేద్కర్ సార్వత్రిక విశ్వవిద్యాలయం విద్యార్థులకు స్వాగతం. ఈ ప్రసారంలో
Hello students, today's topic is accounting process. As you know that the accounting is a business language. As any language has certain grammar and system, here accounting has also certain grammar. Accounting basically communicates the information that to related to business transactions to not only with the management and various other parties. We can draw the accounting process from the definition of the financial accounting. As per the standard definition, financial accounting is an art of recording, classifying, summarizing the financial transactions measured in terms of money related to a concern, related to a particular period, and reporting interpretation of the results thereof. If we closely examine this meaning of accounting, we can draw the process, the different steps involved in the accounting. So first we can divide this into three parts. One is input. Input is the business transactions. The second one is accounting process. And the third one is output. That means communicating the results to the various interested parties. So business transactions, as it is related to a company, took place in a particular year. They are to be processed. So where the accounting process starts. Accounting process, in that the first step is identifying the business transactions. So identification is based on three criteria. One is it must be measurable in monetary units. Second is it is related to that accounting period. So third is it must be a business transaction. After identifying the transactions, we have to record the transactions. So that is the second step. Recording is the second step. While recording, we have to consider certain accounting principles such as concepts and conventions. Accounting, while recording the transaction, basically the transaction should have the two important aspects. One is debit, second one is credit. Debit is receiving aspect, credit is giving aspect. And it must be, that means it is governed by dual aspect concept. Dual aspect concept says that any transaction, the two important aspects are to be identified and recorded, such as giving aspect, receiving aspect, as I told that the debit and credit. And the second thing is we have to observe accounting period concept, that must be related to that accounting period. So and measurable in monetary units. So that is known as money measurement concept. So after identifying that transaction, business transaction, we need to record in the journal. It is also known as day book or book of original entry. So in the day book, we have to record business transactions chronologically. That the first, there are different columns. The first column is the date, second column is particulars, general entry, third is ledger folio, fourth one is debit rupees, and the fifth one is credit rupees. Here we need to identify, after identifying the transaction, we need to write journal entries with narration. So journal entries are written on the basis of three accounting principles, such as personal principle, nominal principle, real principle. Personal principle says that the organization or artificial person or natural persons who receives that must be debited and the giver is to be credited. In the same way, as per the real principle, which deals with the assets, what comes in is to be debited, what goes out is to be credited. And according to nominal principle, all expenses, losses are to be debited, incomes and gains are to be credited. Here expenses we are debiting as the organization is expected to receive certain utility. So, in other words, it is also receiving aspect. The expenses are incurred to receive the utility, that is why they are to be debited. And after following these accounting principles, we need to write journal entries. For example, cash is received from A. So, cash is coming into the organization, so it is debit, and we are receiving that amount from A. So, receiver is A, he is credit. Then we have to write the explanation of the transaction, which is known as narration. And the ledger folio, the number, ledger is the book of accounts. So, in that, what is the page number of that transaction? Here the two transactions should be taken into their respective two accounts. One is cash account, second one is ACE account. So, that is why the ACE account and cash accounts in the ledger, the page numbers are to be mentioned here. And because it is based on the double entry system, we can check the arithmetic accuracy also. So, it is a recording process. Then the third process, classification. As just now I told that the two transactions are to be posted into their respective accounts, that is ledger. So, that is known as the classification. Here an account is nothing but the summary of the transactions having common nature. All cash transactions are to be recorded in cash account. All the transactions related to A, they are to be recorded in ACE account. So, like that here the classification will be done. After classification or after preparing the ledger, we need to summarize the transactions. This is another step. So, summarization is nothing but the preparation of the trial balance, where this is based on two things. Either we can take the balances of each and every account or totals of each and every account. So, after preparing that trial balance, where you can have the total summary of the accounts, so it is nothing but the summarization. And while preparing this trial balance, basically checks the arithmetic accuracy of the recording or accounting process to that level. And after preparing the trial balance, we have to go for the reporting. So, reporting includes the preparation of the different account statements. If it is a manufacturing concern, we have to prepare manufacturing account. After that, trading account, profit and loss account, and balance sheet. Or if it is a trading concern, we have to start with the trading account, then profit and loss account and balance sheet. So, trading account will be prepared to know the gross profit. It is the results of the business basic operations. So, on the trading account you will have debit side and credit side. On the debit side, it is simply the cost of goods sold. On credit side, the sales and the closing stock items will be taken. The difference is either may be termed as gross profit or gross loss. So, this has to be carried over to the profit and loss account. The profit and loss account includes all the transactions related to the business, except that the operational activities. That is, it may be the operating expenses, salary, distribution, administration, and all expenses will be taken into profit and loss account. If at all any other income is there other than sales, interest received, rent received, etc., they will be recorded on the credit side, and the net result would be net profit or net loss. This has to be either added. If it is a net profit, it is to be added to the capital account, or if it is a net loss, it has to be subtracted from the capital account in the balance sheet. Then the last statement is the balance sheet, which is known as the positional statement or static statement. It is to be prepared as on a particular date on the basis of the balances of accounts. So, it consists of liabilities and assets. So, assets again of several types. One is intangible assets and tangible fixed assets, then current assets. Intangible assets, for example, goodwill, patent rights, etc. So, they are to be taken as intangible assets, whereas the buildings, furniture, then other fixtures, machinery, etc. are known as fixed assets, which will have the longer utility. So, they are known as the fixed assets. Then we have the another classification, that is current assets, which can be converted into cash within a year. So, they are current assets. And after all these assets, we have to identify the liabilities also. The liabilities are to be recorded on one side. In the liabilities, the basic thing is capital, reserves, then long term liabilities, short term liabilities, etc. At the end, these two balances must be equal. So, we use it to prepare all these statements in T-shaped pro forma, but nowadays they are to be prepared vertical shape. So, here we have a different methodology. In case of profit and loss account or trading account, first of all we have to take the sales, and from where we have to deduct the cost of goods sold and other direct expenses to get gross profit. And after that, from which we have to deduct all expenses, and we have to add other incomes to arrive at the net profit, and this is in the vertical shape. After this profit has to be taken into balance sheet. Nowadays the people are calling it as statement of assets and liabilities in simple terms. So, first of all, in this case we need to take all fixed assets, then we have to add the net working capital. So, net working capital is nothing but the current assets minus current liabilities. After adding this, if we deduct the outsiders liability, then other liabilities, then we can get the net worth. So, this is vertical presentation. So, basically this accounting process includes, first one is identification, then second one is recording of the transactions, third one is classification, fourth is summarization, and fifth one is reporting. Nowadays the accounting function is not only limited to the preparation of final accounts, which consists of trading, profit and loss account and balance sheet. Now, as per the definition of AICPA, the interpretation is also included. So, interpretation also includes analysis, but analysis is different from interpretation in true sense. Analysis is the methodical classification of the data, that classifying all the assets and the liabilities, expenses, etc. is known as the analysis, whereas the interpretation is the explaining such classification or establishing the relationship, which will be helping the people or users to arrive at certain decisions. So, if this accounting process is followed properly, then the business operations, whether they are leading to profit or loss, they can be effectively communicated to the all interested parties. Here interested parties not only the management people who makes the decisions related to that company, but also the corporate companies and government people and various other researchers, then faculty members. So, this way this accounting process is very important, and we cannot overcome a single step, and we have to follow the step by step method to arrive at or to measure the business income properly and to explain the financial position of the company accurately. If it is a big concern, while recording the transactions itself, we can follow the subsidiary book system, where the major items like sales, sales returns, purchases, purchase returns, cash book, and other important accounts will be prepared, and which simplifies the posting of the transactions. So, that subsidiary system is also used at the stage of recording the transactions, and particularly the cash book is very important, where the cash book deals with the cash which is highly volatile, and a care must be taken when we deal with the cash aspects. So, hence the cash and bank account may be prepared, and this acts as journal and account also. And while preparing the cash book, there are basically three types. One is single column cash book and a double column cash book, then 3 columns cash book. So, single column only deals with the cash aspects. Cash received will be debited and cash paid, all aspects will be credited. Whereas cash and bank columns, so where you have to prepare the two accounts in one at one place by providing one column for cash and another column for bank. Here one must be very careful whether the transaction is cash transaction or credit transaction. Suppose if there is no name in the transaction, that is to be taken as a cash transaction. If name is mentioned and nothing is mentioned about the cash receipt or payment, it is a credit transaction. If name and cash also mentioned, if the cash received or paid, if that meaning is there, then we have to take the cash transaction. And here while preparing the 2 columnar cash book, we should be careful about the contra entries. So, contra entry means the entries appearing on both the sides of account. One is on debit side and other is on credit side, that is known as the opposite sides. And if a discount received or discount paid, that column is mentioned, it is known as the 3 columnar cash book. And you have to balance the cash column, bank column, but not the discount column. And there is another account, if a company is having regularly some petty transactions, we have to prepare a petty cash book also. So, it deals with the very small amounts, because all the small accounts or amounts we cannot write in a cash book, which becomes a very lengthy one. Hence, we have to prepare the petty cash book. And in the petty cash book, if the company is incurring regularly some same kind of expenses, we need to prepare analytical petty cash book also, where that different column or separate column will be meant for one type of expenditure. Let us take transportation, the company is incurring regularly, so transportation column, postage column, stationery column, like that. And it is based on the impressed system, that in the beginning of every month some amount will be given to the petty cashier, and at the end whatever the expenses that are incurred will be deducted, and to that extent again the balance will be recouped. So, this is known as the impressed system. So, while recording one must be very careful, and classification also should be done properly, and their respective transactions, the two important aspects of each transaction are to be taken into two different respective accounts. And if the classification is done properly, then the trial balance preparation is not a big deal. And after preparing the trial balance, again to say that we need to prepare all these final accounts or financial statements, and these financial statements are essential to make any type of decision, whether we are conducting our activities properly or not, and whether our activities are resulting in profit or loss. So, that will be the financial performance of the company will be known from the trading profit and loss account. And of course, as I told earlier, the balance sheet will give us the financial position of the company, the ability of the company to withstand in the market. So, these all statements are carefully prepared in order to make decisions by the management, And if he is a prospective investor also, he will analyze all these financial statements, and if it is a tax department, they will ascertain the income and calculate the cost on the basis of these financial statements only. Hence, this accounting process is very, very important, which will determine the image of the company, the financial performance of the company, the financial position of the company. So, this process has to be meticulously followed, and every step the utmost care must be taken in order to ascertain the exact profit of the company or loss of the company, and in order to know the financial position of the company. So, this accounting process is so important that without attempting the first one, you can't go to next stage or third stage or fourth stage. So, here one must be very careful. The accountant should take utmost care, and he has to learn, or he has to observe all the accounting principles. Then only he can accurately calculate the financial position or financial results of the company, for which the accounting is meant. As accounting is the basis for taking the future decisions also. So, if the process is wrong, the future decisions also may go wrong. So, hence the accountants or the people who are involved in this accounting process, they must be aware of the accounting principles and accounting standards, so that whatever the true fair view of the company can be presented. So, the true and fair view of the company is the main objective of the preparation of the final accounts. Hence, this process has greater role in giving the true and fair view of a company to the all interested parties. For the benefit of the students, reinforcement of knowledge is an essential thing. Here, to sum up, we can say that the entire accounting process is drawn from the meaning or definition of a financial accounting. So, financial accounting, as I said, it deals with the recording, where we need to prepare the journals; classification, where we need to prepare the accounts or ledger; and summarization, reflected in trial balance. At the end, reporting, that will be done by preparing the trading profit and loss account, and also balance sheet. And these financial statements are final accounts, which consists of manufacturing, trading, profit and loss account and balance sheet, in order to give the true and fair view of the company. So, the accounting process is to be followed carefully, and this is possible when we understand clearly the accounting concepts and conventions.
ఈ కార్యక్రమాలపై మీ అభిప్రాయాల్ని, సూచనల్ని, సలహాల్ని ఆహ్వానిస్తున్నాం. మా చిరునామా ద డైరెక్టర్, ఆడియో విజువల్ ప్రొడక్షన్ అండ్ రీసెర్చ్ సెంటర్, డాక్టర్ బిఆర్ అంబేద్కర్ ఓపెన్ యూనివర్సిటీ, ప్రొఫెసర్ జి రామిరెడ్డి మార్క్, రోడ్ నంబర్ 46, జూబ్లీ హిల్స్, హైదరాబాద్ 500033.